You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is 8/10/21. Well, you hear people work in government, work in the private sector, work in businesses, work on Wall Street, all of this. Well, we've got somebody who's done literally everything, and now he is an angel investor and managing partner at Unicorn Venture Partners. And, well, he's an expert at providing a hands-on approach for helping companies grow. Jonathan Hung, it is a pleasure to have you on the show. From working in all these different sectors, nonprofit, government, for-profit, B2B, Wall Street, fund managing, banks, what do you think is the biggest lesson you have learned in all your experiences?
Honestly, for me, it's just that it's not one individual. It's about the team, and who you surround yourself with is so important. I love it when people give so much credit to Elon Musk or Steve Jobs or Bill Gates and Mark Zuckerberg, and it's rightfully so. But Jeff Bezos didn't build Amazon by himself, and I wouldn't be here today if I didn't have the right people.
He did? I thought he did.
Well, it seems like that, right?
Well, it's so funny because all the people you mentioned, Tesla too, they're all, in some respects, a cult of personality. There's one founding person who started them, and his vision or her vision has been enough to keep these companies going. Like, let's go back to HP. Now, not doing that great compared to the way they once were. They were the biggest tech company in the world. But Hewlett and Packard, right? Their vision, and this company's around 60 plus years later. IBM, Watson, now, again, another company that's a fading tech star, but a cult of personality, Doc Watson and the son, and there's still Watsons on the board, and to some extent their vision is still reflected. And you have a company, a startup company, without that strong overarching personality who has the ability to turn your vision into reality.
You know what? I see it as different because, there's difference between a private company versus a public company. Those companies mentioned, they're public now, right? They've already outside of venture capital and private equity, and they're judged differently. I think when you're a private company still, who your leader is and who your executives are is so key, and how you make decisions. I've been to a bunch of schools, I get made fun of it sometimes, like, oh, you sure love school. But yes, I do have 3 masters. And what I learned is I'm not the smartest. I learned that there's different types of personalities. When I was a financial advisor, I used to think well, how does this person have clients? Because they're how they talk business, how they interact is totally different than how I interact. And the thing is, the world's a big place. There's different people who like different things. Some people like people who have a lot of moxie. Some people who are just oh, buy the book, buy the numbers, pure like that and simple. So when it comes to startup investors, I make such early bets that you have no idea where product market fit is, or where someone's able to take this from, $0 in revenue to even $1 million. Because I've learned this. It takes a team to get you a different team in each step. Going from 0 to 100,000 in revenue is something where the founder has to be all about, he or she has to do everything. But then when you go from 100,000 to $1 million, on revenue, it's a totally different team. And then you'll go from $1 million to 10 million to 100. As you scale, you're adding more parts into it. And so, yes, the basis of how the company founded was, yes, that individual, those co-founders, those initial CEOs, COOs, et cetera. But then it's really, you're adding onto your team as you grow. And it really depends who you hire. I would say hiring is such a real important trait or skill set that you need to have as an entrepreneur.
So I guess one of the things you were saying then leaders need to build a team. The team is changing as the company grows. They got to keep up with it. So the really good leaders are really effective at changing the team, adding to the team, replacing. I think like one of the greatest examples of that, and it's controversial because we don't really know how this company evolved truly, is Facebook, because you get to see that. You get a sample of that in the movie and in the book, The Social Network, because it starts out with one group of people. They kind of outlive their usefulness. He doesn't seem to be very bashful, Zuckerberg, about blowing off old people and replacing them with new who will get the job done, and probably still doing it to this day. Let me ask you a question about the tech oligarchy here, Jonathan. Does it concern you, censorship and their really extreme power to mold and to keep out public opinion and to focus it on the things that they want it focused on?
Well, I mean, for me, I think everyone has a choice. I mean, we're not in China, we're in the US, and there are numerous platforms. I mean, for me, when I look at investments, it's not like, oh, I only invest in something that's only for half the population or the other half. I'm trying to find the best business model that makes sense, that can scale to a certain a level. It's weird because like when I make these early bets, it's almost like this one thing is going to make everything pay off for everything. And it's just weird. It's just like, and it's not a numbers game, because for me, it's more art than science. For when it's so early as an angel investor and a seed investor, when I look at my entrepreneurs, it's not that they were just so smart that they went to the best schools or had the best experience. It was just like this form of just grit and relentlessness that, they're going to get shaped and molded. Like I've spoken to people where, they've invested in Zuck, when the company was worth $1 billion. And there was no way that Mark Zuckerberg at that time, when the Facebook valuation was $1 billion, knew what Facebook would be today, how he added WhatsApp, how he added Instagram. And those weren't even concerns at that time of how the company is truly shaping how we look at things in society. So I think we have a social responsibility. We have these things, but it takes time to mold and build and grow as you mature as a company.
So when you're talking about tech, what trends do you see emerging, and what companies you think will evolve to cash in on those trends?
Don't just survive, thrive. The Financial Survival Network.
Lumina Gold, ticker symbol LUM on the Toronto Venture and LMGDF on the OTC, is yet another of legendary mining investor Ross Beaty's Lumina Group. It's advancing the largest primary gold deposit in Ecuador. The resource is estimated to contain 16.7 million ounces of gold and 2.2 billion pounds of copper. At just $7 US per ounce gold equivalent, it trades at an incredible 13% of its net present value. More good news is on the way with an updated PEA study expected in Q2 of 2020. It has unparalleled infrastructure. There's grid power to camp with plentiful, inexpensive hydropower available. It's close to 2 ports and is just 8 kilometers from a paved highway. Water is plentiful. It's at low elevation, and the closest community, which is very supportive of Lumina's effort, is just a 7-kilometer ride. With all this going for it, it's likely to follow the typical Ross Beaty formula, which means big returns to shareholders. Find out more and sign up for notifications at luminagold.com. That's Lumina, Lumina gold.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
You know what? Because of what happened in the world with COVID and everything, what is the future of work? Like there's something, this joke now I see, not joke, but this saying like the great resignation, like 1 out of 3 workers are looking to change jobs or looking to make transitions. Like we're used to working at home now. So what does the future of work look like? And also the creator economy. I think like Web 1.0 was just like, hey, what's this? Like, why would I give my credit card? To this online thing.
I remember that.
Yeah. Like what? I'd be like, why am I putting my credit card information on here? But look at, and Web 2.0 is like, well, I get to use Google and Facebook and do all these things, but they're data mining you and using that to make money.
Or the product. You're the product, right?
Exactly.
Data.
And now this new version of the creator economy, Web 3.0, well, you should own your own data. You should be able to set prices, like, whether you're selling direct to consumer goods or you're podcasting or you're blogging or whatever, people are going to pay you for your ideas and your work and your creativity. So it's going to be really interesting that going forward, like how can you be able to make money on your own data, on yourself?
Yeah, that's such a great point. And that's exactly the thing that I am working on now without talking further about it. But I think that's like really important because I think Tim Cook said it best. Said with Facebook, with Google, Twitter, whatever, you are the product. Your data is the product. At least Apple sells products. They might use that data to further develop products and maybe to control access to their platforms and such. That they might do, but they actually have a product with Facebook. It's a perfect example of data mining, and TikTok is even worse than that. All these sites, it's all about getting the data. They give the product away, the service away for free, supposedly, like Robinhood, but it's kind of held for ransom, the price of which is your data.
Yes. Kerry, I made a mistake in 2013. Speaking of that, I got a company pitch deck and it was like $20 million valuation. And it was a gaming company where you pretend to buy and sell stock. And I was thinking, who would play this game? This isn't Fruit Ninja.
Game.
Yeah, it was a stupid game. And I thought to myself, why is it called Robinhood? And if someone had told me then that it wasn't just a gaming company, that it was more about data mining and understanding how individuals trade and that they sell the data to hedge funds, then maybe I would have understood it better. I just literally thought it was a game. Because look at the Robinhood now. When you buy a stock, confetti goes off, and it's just like, wow. And then look where it is. It just like last week or last 2 weeks ago, it traded, right? Went public finally. And I'm just thinking, wow, 20 million went to supposedly 30 billion. I don't know what the market cap is. I would have to look at it, but just based on that alone, just the data mining.
That's wild. And so everybody's got the stories of the one that got away. Obviously, that's one of yours. What about some that haven't gotten away?
You know what's so funny? So that was in 2013. Last week, I had another company get acquired. I can talk about it now. It was acquired, a company called Bear Flag Robotics. It was acquired by John Deere. Bear Flag, what they do is autonomous tractors, farming. When you think about it, a huge industry, farming, but the labor costs are tremendous. And there's not enough people who actually want to go in the fields. Everyone talks
groves. They're leaving groves.
Yeah. Everyone talks about how we're going to have self-driving cars, but that's just so much harder. Getting all the LiDAR technology right, getting the 5G or 6G or whatever, 7G to make those split decisions quicker, where you could have an autonomous tractor on an open field. Of course, there could be some rabbits or, some birds in the way, but really you're not going to have pedestrians, you're not going to have people walking their dogs or other cars. You're having an open field. And, we were very fortunate that John Deere saw that. The team was wonderful. I met the founder when we went to business school together. And, I was one of the first check writers when the company was valued at only $3.5 million. It got acquired for $250 million last week.
So let's explore this question of valuation, because like a Robinhood, it's valued at 20 million. I don't know where they came up with it. How do you allocate valuation? I've heard different formulas for angels, where management team, product, revenues, vision, all those things. What's your personal way of doing it?
For me, it's interesting because I'm part of angel networks like Tech Coast Angels, and they're like, oh, we got to be under 8 million, and we can't, and we don't want to do a note. We want to do a price round or a convertible note. For me personally, it always just depends. And I see it more as industry. If you're a service-based business, the multiples are different. And you have to scale differently. But if you're a software B2B platform tech company, you're going to see crazy multiples. I have one company also that got bought. I was very fortunate. I got into it literally 6 months before, and it sold in 6 months. And it was a company called DocSend. And DocSend, it got bought by Dropbox. And it was crazy when you looked at the valuation, because like at the time, I thought we were going to get in around 80 million, buying secondaries. And then, people pushed it up to 93. And then finally someone pushed it up to 120 million. And then when you looked at like, wow, exactly how much revenue they were doing, based on the actual sales price that Dropbox bought it was tremendous amount on the multiple. And when you look at a service company, sometimes it's just like, oh, it's maybe just like 2 to 3x. Or you look at a consumer goods company, like, oh, you're selling literally this can of water or this, this CPG product, and maybe the multiples are 2 to 3x. So it really depends on what industry you're in and who the likely buyers are. Sometimes Google and Facebook will pay definitely more for tech. Salesforce will pay more than tech than a Nestle would for a new concept or product.
Well, that's what I'm counting on, and we're going to be in touch with you very soon. Interesting. So for the average individual who'd like to dabble in angel investing, what's the best way to do that, Jonathan?
Honestly, don't do it by yourself. I mean, we talked about that Robinhood deal. Like, I literally saw it as my 4th or 5th deal when I got into angel investing. My first deal that I got was a company called GIFT, GYFT. And literally 10 months later, it got bought by First Data. That was just, it was wonderful, but also it was like kind of bad because you think like, wow, that was quick. This is easy. But it's not that easy. It really is.
Not all work that way, do they?
No, all work out with short-term capital gains like that with a 2.5x multiple. Really, it's about networking. I think one of my great skills or abilities is that, I recognize that I don't need to be the smartest person, that I need to find other bigger brains than me in certain industries and find expertise. From that first investment, I got to meet my friend Buck Jordan. Great guy. He actually got me into another company as well. And it was just a pitch. There was no product. There was no software. It was just a team. We talked about 4 PhD roboticists from Caltech, and they wanted to come up with a machine that makes hamburgers.
Oh,
and that was the pitch.
Flippy the burger flipper.
I was one of the first investors of Flippy.
Wow.
I put down a 25K check on just the idea because there was no robot. They needed to raise money to build something.
But hey, I guess the mind can, anything the mind can believe in and conceive of, you can achieve. And Flippy is kind of catching on.
Right time. Look at the market. COVID. Like, people don't even want to go to work. McDonald's is offering $15 an hour, like free food. People don't want to work. And so it's like, you see that.
Yeah, well, maybe it's the free food that's stopping people from going to McDonald's, because what passes for food in this world, Jonathan, if you could kind of find an application where we actually eat healthy food, whole food that came from the earth, that would be great. I love the robotic tractor. I've seen a bunch of ads for that tech recently. I just didn't realize that it was really that close and was actually happening, that John Deere purchased the company. Hey, people want to find out more about you, connect with you. Where's the best place to go?
You just go to my website, jonathanhung.com, send in an email or reach me on LinkedIn.
All right. Excellent. Hey, got a question for Jonathan. Why don't you shoot me an email to kl@kerrylutz.com. Make sure you go to the site while you're at it. Sign up for our free newsletter, financialsurvivalnetwork.com. Jonathan, it's really been an interesting conversation. Appreciate you coming on.
Sure. Thank you, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.